It's extremely important to understand the concept of accrual. What is the accrual basis of accounting? It is a method of recording accounting transactions for revenue when earned and expenses when incurred. So revenue is earned from services provided, but payment have not yet been received. Then is that revenue? It is if it's earned. That's what the basis of accounting means. What about expenses? Utilities were incurred, wages were incurred, but haven't been paid yet. Is it an expense that we need to record? Yes, it is. That is the accrual basis of accounting, and that is required by GAAP, generally accepted accounting principles. Cash will be received from the customer in a later period, and cash will be paid to vendors in a later period. However, it needs to be recorded in the current period, the period that it's earned, the revenue earned, and the expense incurred. If we do not record the accruals, then we are not following GAAP. And if we are not following GAAP, generally accepted accounting principles, then our revenue will be understated and our expenses will also be understated. The accrual basis of accounting is in contrast, opposite of the cash basis of accounting. Cash basis of accounting, we only record revenue when we received payment. Even though we haven't performed any service, we haven't delivered any product, but all of a sudden we received money, then we record revenue because money have been received. This is the cash basis of accounting we're talking about, not the accrual basis. Similarly, with expenses, we haven't incurred the expense. However, we decide to pay the expenses ahead of time. Let's say someone needs you to babysit and that won't take place until next month. However, that person is giving you cash now and say, can you babysit next month? But I have money now. I'm going to pay it to you, give it to you right now. Then the cash basis of accounting, that's your revenue. However, the accrual basis of accounting, that is not revenue. So in the accrual basis of accounting, we have accounts such as accounts receivable and accounts payable. Even though we haven't received money, but we have performed the service, then we could record it to accounts receivable. We can't do that under cash basis of accounting. There is no accounts receivable. Revenue is recorded only when cash is received, and expense is recorded when cash is paid. And this is the cash basis of accounting, so there is no accounts payable. The cash basis of accounting is not generally accepted accounting principle. It's not GAAP. But it is used. It's used by small businesses. It's not used by large businesses because the cash basis will not provide accurate financial statements for users' need. The accrual basis of accounting follows the revenue recognition principle, meaning that revenues are recorded when services have been provided or products have been delivered to the customers. It has been earned, so we need to recognize the revenue that was earned. Likewise, the accrual basis of accounting also follow the expense recognition principle. Expenses are incurred and so must be recorded. And expenses we know is incurred in order to generate revenue. When revenue is recorded when earned and expenses recorded when incurred, we follow the matching principle. Expenses must be recognized in the period incurred, the same period of revenue that it helps to generate. What does it mean that expenses help to generate revenue? For example, wages expense. It's payment to employees for work performed. It's incurred in this period. However, sometimes it overlaps with the next period, like the next month, and it's not paid out into the next month. But the company still needs to record the wages incurred in this period because these wages generate the revenue that's operated in this period. And when that's done, that's following the matching principle. Matching revenues and expenses. Otherwise, the operation is going on this period and the expense that's incurred for wages of employees that helps to generate these revenue in the current period is not paid into the next period. But if we don't record it this period and we record it in the next period, then that doesn't follow the matching principle. That would mean expense in the next period, but revenue is in this period. It doesn't match up. And in order for it to match up, we need to follow the accrual basis of accounting. By following the accrual basis of accounting, we need to do adjusting entries to properly match revenues and expenses. At the end of the period, we need to record for the recognition of revenue that's earned and the expense recognition that's incurred in the period. By completing these entries, we are following the adjusting process. And the reason we have these adjusting entries because some expenses are not recorded every single day. It may be waited upon and recorded in batches every week, every number of days. Now, some revenues and expenses are incurred as time passes rather than as separate transactions. For example, let's say rent. Rent was received in advance as prepaid expense. And if we don't do anything, we will not reflect the expenses accordingly because through the passage of time, the prepaid rent expense and asset will become an expense and we need to recognize that expense. So similar to rent expense, there is insurance expense. Insurance is prepaid for a full 12-month period policy. And as each month passes, we need to recognize the 1 month of insurance expense for each month until that 12-month prepaid asset expires or is consumed, is used up, is depleted. Some revenues and expenses may be unrecorded at the end of the accounting period. For example, utilities or wages. Let's say utilities, there's electric bill. Electric bill is incurred in the current period, but the bill won't come into next month and payment won't be made into the next month. However, this month it's incurred, so therefore we need to record this entry of accrued expense for utilities. Revenue may have been earned but not yet received. Service was performed, products was delivered to the customer, however, payment was not received yet. And the company may not have done the billing and sent out the invoice bill to the customer. So customer hasn't paid. However, because revenue was earned, it needs to be recorded. Accounts receivable and revenue account like fees earned needs to be booked. Other times payment may have been received, but service have not been recorded yet. Other time payments may have been received from the customer, but services or product haven't been delivered to the customer yet. And so this money received doesn't really belong to the company. If anything, they may need to give it back. However, usually, company would hold on to it because they know they are going to perform the service or deliver the product in the future. But when they receive the money, they need to adjust the financials, record the transactions to reflect the fact that this money doesn't belong to the company. They need to record it as an obligation, as a liability. And this obligation is to perform a service in the future. In the future, it will be earned. However, in the present, it is an obligation, an unearned revenue for the money that's received, but service not yet provided or product not yet delivered. At the end of the period, all of the transactions ongoing during the period have been recorded and is assembled into an unadjusted trial balance. Only after recording the adjusting entries, then the unadjusted trial balance will be impacted with additional activities. Then after the adjusting entries, an adjusted trial balance will be then assembled.